Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 350 on November 22nd, 2024. I'm your host, Eric, even though it doesn't sound like I normally am. My voice is out right now. I'm suffering from a little bit of laryngitis. All it takes is a little bit of a season change here in Texas, and suddenly I can't talk for a few days. So I'm going to push through this show. It won't be a long one at all, but I did want to at least make a show, and hopefully my voice will hold up. So in this week's show, we'll cover the trades from last week on Plug Power Inc., Lyft Inc., and Norwegian Cruise Line Holdings. And we discussed 3 new trades on Riot Labs, Barrick Gold Corporation, and Macy's. That's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the equity markets finished the week extremely strong, with the Dow Jones Industrial Average closing at all-time highs for the week, and the S&P 500 index finishing within 30 points of its all-time high close for a week. The Dow Jones Industrial Average grew 851 points, closing at 44,296 points on Friday. The S&P 500 index gained 98 points, ending the week at 5,969 points. And now it's time for the topic of the week. And the topic of the week is choosing not to trade. This won't be a long topic of the week due to my voice, but I just wanted to give some practical advice. You may have done your research or some back testing to figure out a great trade setup that has a high probability of success for an option strategy that you like. You may be excited to execute that strategy the next day, like, hey, I'm going to put this on Monday. But if you don't see the setup that you want, don't make the trade. Don't force the trade when it's not the situation that you found to be high probability. I would argue that you're better off saving your capital for another day to see if you get the proper trade setup that you want. You have to know when not to trade. Losing money on a setup that was not optimal doesn't teach you anything about whether your strategy worked. Making money on a trading setup that was not optimal might not teach you anything as well. You have to know when to fold them and know when not to trade. So let's get into the review of last week's trades. We're going to start off with our covered call on Plug Power Inc., symbol P as in Papa, L as in Lima, U as in Uniform, G as in Golf. At the time, the stock was trading for $1.87 per share. I looked at buying stock and selling the December 2 call at 17 cents, hoping for a return of 16% in 5 weeks. Well, shares of Plug Power increased 5 cents per share, ending the week at $1.92 per share. The call option we sold increased 3 cents, leaving us with a net profit of 2 cents if you were to close the trade out immediately. Now, I'm certain none of you get excited about 2 cents. So we would not close the trade out at this point. The stock inched higher, which is exactly what we wanted. That means this trade is working out as planned so far. No adjustments are needed. Next up, we have a credit spread on Lyft Inc., symbol L as in Lima, Y as in Yankee, F as in Foxtrot, T as in Tango. At the time, the stock was trading for $18.12 per share. I looked at selling the December 18-17 put spread at 37 cents. That could give us a maximum possible loss of 63 cents per spread. Well, shares of Lyft fell $1.33, ending the week at $16.79 per share. The out-of-the-money put spread that we sold is now in the money. If we were to close this spread out right now, we would actually lock in a loss of 53 cents. Now, before we make a move that locks in almost all of our expected loss or possible loss, I would lean towards a little bit of patience. There's still 4 weeks left on this trade. That's plenty of time to see if the stock will head back higher. And if it continues to fall, we only have 10 more cents to lose on the trade. So given the possibility of this trade becoming profitable again in a week or two, I'll lean towards not making an adjustment just yet. We could sell the 18-19 call spread at 19 cents, turning this into an iron condor. However, if we do this and then the stock rallies again, we might end up suffering a loss due to the trade adjustment that we made. So it's still early and the verdict is still out on this trade for me. So I'm defying my own rules about making an adjustment once the break-even price has been passed rather. But I think properly using the additional time until expiration could actually give it some time rather, to become a more profitable and less risky trading outcome. And then our final trade from last week was a debit spread on Norwegian Cruise Line Holdings, symbol N as in November, C as in Charlie, L as in Lima, H as in Hotel. At the time, the stock was trading for $26.42 per share. I looked at buying the December 25-26 call spread for 64 cents. That could give us a maximum gain of 36 cents, or that's a 56.25% return in 5 weeks. Well, shares of Norwegian Cruise Lines grew 44 cents, ending the week at $26.86 per share. The in-the-money call spread that we bought is still in the money. The stock is more than $1 above the break-even point, and this trade is working out as planned, so no adjustments are needed at all. All right, so that's it for the trading review. Let's go ahead and get into the new trades for this upcoming week. Of course, all new trades on today's show will use the December 20th expiration for monthly options that expire in the month of December. Our first trade is going to be the covered call on Riot Labs Inc., symbol R as in Romeo, I as in India, O as in Oscar, T as in Tango. The stock is trading for $12.31 per share. I'm looking at buying stock and selling the December 12 half call at $1.56, hoping for a return of 14.22% in 4 weeks. Now you enter this trade by buying stock for $12.31 per share and selling the December 12 half call at $1.56. This trade makes the most money if stock prices finish above $12.50 per share. The break-even price is $10.75 per share. In real terms, the stock purchase would require $1,231, and you'll collect $156 for selling the option. Next up is a credit spread on Barrick Gold Corporation, symbol G as in Golf, O as in Oscar, L as in Lima, D as in Delta. The stock ended the week at $18.24 per share. I'm looking at selling the December 17 half put spread at 17 cents. That could give us a maximum possible loss of 33 cents per spread. And you enter this trade by selling the December 18 put at 49 cents and concurrently buying the December 17 half put for 32 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $18 per share. The break-even price on this trade is $17.83 per share. In real terms, you'll collect $17 per spread that you sell and have $33 at risk. And our final trade on today's show is going to be a debit spread on Macy's, symbol M as in Mike. The stock ended the week at $16.29 per share. I'm looking at buying the December 15 half 16 call spread for 30 cents. That could give us a maximum gain of 20 cents, or that's a 66.67% return in 4 weeks. You enter this trade by buying the December 15 half call for $1.55 and concurrently selling the December 16 call at $1.25. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $16 per share. The break-even price is $15.80 per share, and in real terms, you'll pay $30 to enter the spread, and your maximum gain is $20 per spread. So that's it for this week's show. Thank you guys for listening and giving me a little bit of grace this week. I'm committed to making this show. I've recorded this thing all over the country, arguably all over the world. I have recorded a show or two from out of the country. So I'm committed to making it for you guys because you've been committed to listening to me, and I'm not going to let a little bit of laryngitis keep me from sharing what I know about options with you guys. So thanks for listening. Thanks for sharing it with your friends. Have a great weekend. Have a happy Thanksgiving if you're in the U.S., if you celebrate that holiday, wherever in the world you might be. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.